Well, Matt Damon's only gone and crashed crypto. I'm joking, obviously, but it has been pretty much impossible to be on the internet in the last few months or even go outside without seeing a Crypto.com ad. While these ads definitely bring more people not only to the Crypto.com platform, they also bring new eyes into the crypto space in general. But is their native coin anything to brag about? Stick around and let's talk about it. Hey guys, I'm Sprague, and I'm going to be changing the format up a little bit for this one because I can't really talk about CRO without talking also about Crypto.com. So this will be a bit of a dual deep dive into both the platform and the coin. First launched in 2016, Crypto.com's aggressive approach to marketing has seen it very rapidly rise to dominance in the crypto exchange space, becoming the 11th biggest exchange by trade volume. This is also what led to their marketing campaign, Fortune Favors the Brave, having Matt Damon as their brand ambassador.
Fortune favors the brave.
Recently, Crypto.com hit 10 million users and over $3 billion worth of trade volume, which just goes to show how massively popular the platform has become. On top of this, they've also got services such as their DeFi wallet, which is an entirely non-custodial wallet that allows users to take advantage of the lending platforms such as Compound or Aave, or even perform token swaps directly from the wallet interface. This makes it incredibly easy for users to get into DeFi and not have to deal with some of the, frankly, awful user experiences that some of these lending platforms have. Trading in 233 markets with 139 listed coins, Crypto.com is the on-ramp for a lot of newer investors. However, it hasn't always been smooth sailing for Crypto.com related ventures. MCO was a token created to give the holders increased staking power on the platform, with 30% of these tokens being sold off in an ICO. However, not long after this, Crypto.com released a second token called CRO, which is originally going to work alongside MCO. However, I'm not going to go too deep into CRO now because I will be covering it later in the video. And as always, if you enjoy my content, you want to see more coin deep dives, tech explanations, or even just opinion pieces from myself, don't forget to hit the subscribe button down below. Thanks. Without warning, Crypto.com sprung out on MCO holders that they were going to have to convert their MCO to CRO, either doing it early and getting a 20% bonus or waiting until it was forced on them. This exchange rate was 33 MCO to 1 CRO, which effectively at those prices pinned the value of 1 MCO at $5.60, which meant that anyone purchasing MCO up until the announcement came out was effectively going to make a loss on their investment. However, I don't necessarily think that the thing that people had the most issue with was this token conversion, because the price of CRO quadrupled in price after this conversion happened. The part I think most took issue with was actually how the tokens were now distributed and the potentially shady activity that went into the price of MCO to begin with. Tackling the first of those problems, the 33 to 1 conversion ratio now meant that Crypto.com held a far larger portion of CRO than they ever did MCO. Whereas with MCO, the investors held 30% of the tokens that were sold off in the ICO, now with CRO, they hold less than 10%. And the second problem comes in the fact that a lot of MCO's trade volume happened on an exchange that is notorious for wash trading. This is where one party trades coins back and forth effectively to themselves to make it appear like there's a lot of activity going on. This, coupled with the Crypto.com founder's previous business venture being closed down due to suspected cash flow issues, raises a few red flags that something wasn't quite right. However, this is all entirely speculation because we don't know whether or not wash trading actually occurred or whether it was Crypto.com themselves that were doing it. Adding further issues, on the 18th of January 2022, Crypto.com underwent a major hack that saw $15 million worth of Ethereum moved out of their hot wallet. The initial statement from Crypto.com was just that some users, even those with two-factor authentication, had noticed some suspicious activity on their account and even notifications of pending withdrawal. This then led Crypto.com to temporarily suspend withdrawals from their platform. However, a blockchain analysis firm called PeckShield then came out with a public statement that they could see 4.6 thousand Ethereum had been moved out of Crypto.com's wallet, and half of this Ethereum was now being run through a service called Tornado Cash. Tornado Cash is a decentralized platform that provides a service called washing. With everything on the blockchain being completely public, one-to-one transaction anonymity just just doesn't work. And that's where washing comes in. Washing uses a variety of methods to obfuscate where incoming funds have gone. And as you can probably imagine, there is little to no reason why a legitimate user would need a washing service, suggesting that there has definitely been something malicious happen to these half of the 4.6 thousand Ethereum. This then prompted Crypto.com to then come out and say that no user funds had been lost, which is very specific wording that, given that we know funds were stolen, suggests that they had used some of their own reserves to reimburse customer accounts to save face. There's no doubt that Crypto.com has cemented itself in the upper echelon of crypto exchanges, with the amount of users on its platform, the volume of trades that it now partakes in, and how fast it is to add new coins when the community wants it. And we can be fairly certain that with that number of users means that the exchange kind of has to stay on the straight and narrow, because they are heavily regulated at this point. However, the more questionable aspects of a platform should always be kept in mind when you're investing in it, which is pretty much what you would be doing by buying CRO. You're kind of just investing in Crypto.com. But now that these cautions are out the way, is the CRO token itself actually worth an investment? As you can imagine, being a coin that was created purposely for Crypto.com, most of CRO's utility is tied to that platform. Holders of CRO get to take advantage of lower trading fees on Crypto.com, higher APY rates on the crypto that they lend, and if they have a Crypto.com card, they get better cashback the more CRO that they stake. Anyone can have a Crypto.com card, however the base rate for cashback is only 1%. However, the highest tier of staking is all the way up at 8%, if you can afford to stake 400 grand worth of CRO, that is. However, even at the lowest tier, this cashback raises massively if you try and use your card in a retailer that natively accepts CRO, such as Ledger. However, it's not unrealistic to assume that these rates will go down as adoption rises, as is usually the way with trying to incentivize people to use a new platform. Now, up until November last year, CRO only existed as an ERC20 token. However, that has all changed now with the launch of the Crypto.org chain, with tokens now being migrated from ERC20 to the native token of the Crypto.org chain. Which leads us nicely to the Crypto.org chain. The Crypto.org chain will effectively power Crypto.com Pay, which is a platform that allows merchants to accept crypto with far lower fees than a traditional payment provider might take, such as Visa. On top of this, unlike a lot of other platforms that allow the accepting of crypto as payment, Crypto.com Pay allows the merchants to immediately transfer the money back to fiat, which alleviates some of the risks of holding crypto for people whose livelihoods depend on that income. One major thing to note as well is the fact that the Crypto.org chain is built on the Cosmos Tendermint SDK. This means that with enough network participants, there is no reason that the Crypto.org chain cannot be completely decentralized, with absolutely no reliance on Crypto.com at all. This alleviates one major concern I would have had, because the Tendermint SDK at this point has got a lot of chains built on it, and has proven its capability in building proof-of-stake chains, and takes out a lot of the groundwork that might have been required for Crypto.com to get up and running. If you'd like to see an in-depth video on how the Cosmos Tendermint SDK actually works, check out my video up here. On top of this, or should I say to the side of this, Crypto.com have released Cronos, an EVM-compatible sidechain that works alongside the Crypto.org main chain. Once again opting to use a Cosmos product, Crypto.com has chosen Ethermint as the basis for Cronos, which is an SDK that allows anyone to create an EVM-compatible chain. And by doing this, they get to take advantage of the massive benefit that Cosmos chains can communicate with each other through IBC protocol, which means that this new Cronos chain can communicate directly with the Crypto.org main chain. This also allows them to take advantage of new emerging markets such as NFT and DeFi, due to the fact that anything built on the Cronos chain will in theory be bridgeable to any other Cosmos-based chain. This is evident in the fact they've already managed to scoop up some big NFT artists such as Snoop Dogg to use the Cronos chain, or they've even got $1.5 billion locked behind DeFi protocols built on Cronos, which is no small feat for a new chain. In terms of my concerns for CRO, I only really have one, and it's the fact that the token will always be intrinsically tied to Crypto.com. Without Cronos, the only function of the CRO token is for users of Crypto.com to take advantage of greater staking returns or be able to use the various features on Crypto.com. And without Crypto.com, it's unlikely that Cronos on its own would be able to support CRO. This means that any negative news coverage or any anything that the platform does that could have a negative opinion in the community could potentially cause a panic sell. This might have been confirmed with the January 18 attack, however, unfortunately, the market was about to suffer a giant correction anyway, and therefore it's really hard to see whether or not this particular piece of news had any effect or not. And this unfortunately is a red flag for me, because when you have a decentralized platform, having its value almost tied to a centralized platform's growth is a little bit of a risky one. As we know, something happened with the previous company that the Crypto.com founders started. And for that reason, if they did do anything shady in the future, there's a good probability that CRO would end up taking a hit. And without Crypto.com, then you're only left with Cronos. And Cronos is only as good as other chains that have been built on Ethermint. Unfortunately, they're all just Ethereum competitors. The thing that makes CRO unique is the ability to be used on the platform Crypto.com. However, I do think with the current direction of the crypto market gaining mainstream adoption and the amount of money that Crypto.com is allocating to try and acquire new customers, I don't really think that there's any reason to be concerned by this. So I hope you guys enjoyed this video. If you did, leave me a like and a comment down below. And as usual, if you generally enjoy my content, please consider hitting the subscribe button. Thanks.